Hello traders, welcome back to the Forex gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the volume adjusted moving average, which is the VAMA, a powerful indicator that combines price and volume data to provide a more accurate representation of market trends. This advanced tool offers a unique perspective on market dynamics, potentially giving you an edge in your trading decision. So by the end of this video, you would understand that the VAMA you understand what it is, how it works, and most importantly, how to implement it in your trading strategy. So stay tuned as we uncover the potentials of this versatile indicator and explore how we can enhance our trading performance. The VAMA, the volume adjusted moving average, it is an advanced tool. This is basically an advanced tool. An advanced technical indicator that combines price and volume data to provide more view on the market trend. So turning on my indicator, you will get a better understanding of what this indicator does in the chart. It combines both price action with volume data. So one of the key feature is that the VAMA is adaptive to look back period. Instead of using a fixed number of bars, the VMA averages the price within a specific volume increment. This means that the number of bars used in calculation can vary based on the trading volume, potentially making it more responsive to market dynamics. So let's see how we can implement the VAMA into our trading strategy. First of all, we set up our indicator. By our VMA indicator, we set up two VMA indicators. The first one is the shorter period. So you go to your shorter period, which is your fast length, your VMA fast length, and you change it to 8. This is your first VMA. While the second VMA, which is your slow length, you change it to 55 and you press OK. This will be the particular setting we'll be using for this VMA indicator. This ensures that your charting platform allows your VMA calculation, and it's not all platforms that have this indicator built in. So it is necessary to always make use of platforms such as your TradingView that make use of these instruments. The second step is to identify the overall trend, analyze the direction of both the VMA lines and the price action. And as we can see, the VMA lines is signifying that we are in an uptrend in this area. We can analyze both the price action, which is telling us we are making series of higher highs and higher lows, higher highs, higher lows, and higher highs. This indicates that we are in an uptrend. After you analyze the direction, in a downtrend, you will look for both the VMA line and price to be falling. So when price is below the VMA line, it is in an uptrend. When price is below the VMA line, we are in a downtrend. This is simply what it means. In this area in charts where price was trading below this red line, this red area, we can notice that we are in a downtrend. So this is basically how we can understand the VMA in respect to in respect to price. So we look out for crossovers. We have to pay attention for crossover between the fast and slow moving VMA lines. A bullish signal occurs when a fast VMA crosses above the slow VMA. So when you notice your fast VMA crosses above your slow VMA, it indicates a bullish trade. And when you see this, you will notice the color changes, and this crossover is powerful because it indicates a trend change. However, be aware that a ranging market, frequent crossover may occur. So we just need to see a bullish crossover, and as we can see, there was a crossover in this area changing the color, and there was also a crossover in this area signifying higher prices. If you are looking for a bearish trade, you see when the slow moving VMA crosses below the fast moving VMA. This will indicate a bearish situation. So to confirm you confirm with price action. To increase the probability of successful trade, you have to wait for price confirmation. In an uptrend, you look for price to pull back to the faster VMA before entering a long position. The faster EMA is usually, let's change the color to make this more understandable. The fast moving EMA would use, let's use blue line for the fast moving EMA to help us better understand what we are making use of. So we'll change the color to the blue line to make it easier to spot on the chart. So when the fast moving VAMA, when we notice the fast moving VMA, and when it pulls back to price for an uptrend, you look for the price to pull back to the fast moving EMA. So when price pulls back to this blue line, it signals our buying opportunity. So we'll enter our buy trade in this area. When price pulls back to this blue line, which is the fast moving VAMA, we would enter our buying opportunity. Then in terms of a downtrend opportunity, you wait for price to rally back to the fast moving VAMA before entering a short position. So when price is now trading below the VMA indicator, you wait for price to pull back to your fast moving VMA, which it did in this area, and this will help you to better enter your sell position in the trade setup. This rally should form in a lower high region. So you look for candlestick pattern or other price action signals at these levels to confirm your entry. So your selling position usually happens in a lower high area, while your buy position, it happens in a higher high area, a higher low area. Lower high for selling, and it happens in a higher high, in a higher low for your buy position. The next thing we need to know is where to place our stop loss strategically. For a long trade, you set your stop loss below the slower VAMA. So you set your stop loss just below the slower VMA, the slower VAMA. This line down here, this green line, this is where you set your stop loss, just below the low. While for a selling position, a short trade, you set your stop loss above the slower VAMA, which is above this red line. You set your stop loss above this area. Then you take your profit by using a trailing stop to capture potential gains. As trend progress, adjust your stop loss by trailing this behind the slower VAMA. So you trail your stop as market moves in your direction. You be trailing it along the slower VAMA. So your stop loss would be at this area. Let's assume this line would be our stop loss. When price keeps moving in our direction, when price gets to this area, we'll keep following the slower VMA and be adjusting our stop loss while price moves in our direction until we are being taken out. This is where we would decide to keep our stop loss and move in the direction using the slower VMA. Or we can also use a fixed risk to reward of 1:3 or 1:2 for your profit taking. Now we can also incorporate with the volume confirmation. You pay close attention to the trading volume as an additional confirmation tool. You look for an increasing volume, so including my volume indicator on this strategy. You just need to look for an increasing volume. You look for an increasing volume as the price moves in the direction of your trade. As you see an increasing volume, this suggests that strong participation and increasing the likelihood of trend continuation, but be conscious of price movement on a slow volume, as this may be not sustainable. Also watch out for volume spikes at the VAMA levels, which could indicate strong support or resistance level. So you can use your volume to confirm your trend and to be sure that price is moving with a volume, with volatility in its market. This is how you spot this using your volume to further confirm your trading setup. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on your notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching and I will see you in the next video.